Hi everyone, welcome back. In this lesson, we will take a look at how to apply fundamental analysis and technical analysis together. Here's an overview of the lesson. We'll first talk about basic applications of technical analysis, TA, and fundamental analysis, FA, and how they can support each other and correlate. We'll take a look at specific correlations between market capitalization and Bitcoin dominance and how that functions with overall market environment and price action. And we'll also take a look at various on-chain metrics using fundamental analysis and how those metrics correlate with price action. So utilizing technical or fundamental analysis to support your trades or your investments is a great idea to start with, but the best results can often be found when combining both perspectives. Some people often to only choose just technical analysis to look at markets. Some people will only invest based on fundamentals, and there's no right or wrong way to approach a given market, but often great ideas and great results can be found when combining both. And some things we might want to consider is how does the price action of the asset relate to the fundamental state of the project? Are there any fundamental reasons behind what price is doing? What is actually happening on the charts? And is there something fundamentally behind that price movement? You might want to ask, how can I best use knowledge of both spectrums to improve my trades or investments? How can I be the most informed that I can be? Now, one thing to consider is, are there any fundamental updates scheduled that could support your trade idea or your investment idea? Now, in regards to crypto, there might be some crypto-specific updates, maybe a change or an alteration to a coin's fee structure, maybe an alteration to its block size or its consensus protocol, how it's actually adding information to the network. For example, Ethereum is in the process of transitioning from a proof of work or crypto mining consensus protocol and is transitioning towards a proof of stake or staking protocol, similar to how Cardano would function. Cardano is very popularly known as a staking pool coin, a coin that utilizes proof of stake to add information to its blockchain. Another thing to consider is if there are any sector-specific updates, such as an Ethereum update that could affect coins on its network, such as Uniswap or Polygon. Next, let's talk about identifying the market. So the market environment refers to the macro level viewpoint of what's going on in the market. Now, part of that is being able to identify the current market trend. Is the overall market in an uptrend or downtrend? Is there a sort of bias in the direction that price is moving, whether upwards or downwards? Where is price coming from? Where could price go to? How do the higher time frames, such as the daily, weekly, and monthly, look? The overall market structure. Does your trade idea align with what the market is showing you? Now, if you are unsure with how to identify the overall trend or the directional bias, the market environment, or the market structure, be sure to check out our section in our lesson package on market structure and specifically on time frames. These two lessons will focus and go more in depth on those two topics and how to analyze and build up your own analysis of the market, of what's actually going on in front of you. Another thing to consider when identifying the current market trend, what is Bitcoin doing? This is really important as a cryptocurrency trader. Now, while the overall crypto market is becoming much more diverse over time, we're starting to see other coins really cement themselves and solidify themselves as integral parts of the community and the asset sector. Bitcoin is still the dominant force where most, if not all, the coins in the crypto space will follow its rallies and its pullbacks. So here's an example of different ways to view a market. This in particular, this is Bitcoin to the US dollar. This is the daily chart. And we see this is actually in 2021, particularly at the end of July. We saw from the end of July, beginning on the 19th and going into the 20th, the 21st, we saw a complete market break, a market structure break from the previous downtrend from May. Prices were falling from the 50Ks and ultimately would settle into the high $28,000 to $29,000 per Bitcoin, give or take, or low 30Ks. We saw on these 2 days the beginning of a bottom, of a true market bottom. The market was beginning to bottom out, and then a reversal to the upside, a reversal of the previous trend, which was downwards. And now this is an example of an uptrend. We see this market structure where we see a lower high, a higher high, a lower low than the previous lows. This can act as our swing low. And then we see a higher high than the previous high shown before. And then we see a low, a higher low than the previous low. Once again, another high, a higher low, higher high, arguably a higher high here, a higher low, and then another higher high. So this would fit the bill of what an uptrend or an uptrending market structure would look like. Now, if we take this same time period and look at it, let's say on the 15-minute time period, 15-minute candle chart, we see a more in-depth picture of what actually is going on in the market. Here, it's generally, once again, we are seeing more general higher highs and higher lows, but as we start to look in more smaller time frames, on the lower time frames, such as the 15-minute, we start to see more differentiation between the lows and the highs. Like right here, for example, generally the market is still moving upwards, but within this upward pattern, within that pattern that we saw in the daily chart, we are seeing a high, a low, a higher high than the one before, a higher low, more higher highs, and then we actually fell to a lower low. So really, analyzing these conditions, analyzing market environment can be subjective. I really highly suggest to always look at the larger time frames first. We want to see everything through the lens of the higher time frames, such as the daily, the weekly, the 3-day, the 4-day, those larger time frames, because those will really have the most effect and will be the most telling on what the overall market condition is. Now, if we focus even more on the micro level, really focusing in on a specific level, we'll take a look at this particular part of this uptrend. Once again, this is our example of our daily market trend, our daily market environment. Here we see the 15-minute market environment over the same time period, late July 2020 into late August 2021. And here's the 15-minute. This is specifically focusing on the 23rd, the 24th, and the 25th. This would fit the criteria of a descending market structure. This gives a very different picture than what we saw in the past two slides, even though it's the same exact chart. Here we're seeing a high followed by a low, a lower high, a lower low. This could be considered a lower high compared to here. So if we want to not consider this part, we can consider this to be a high, a lower high, an even lower high. Generally, prices are trending down, and they were trending down over these past 2 days. Once again, we want to keep in mind the time frame we're looking at this and we're using to identify the market environment. If you need more help with that, please see our time frames and market structure videos.